Our volume was okay?
Yeah, we're good. Morning, everybody. Hope you're doing well. We finally have some nice weather going on here. It's a little cool today, but definitely better than the dreary days of a couple weeks ago and making people feel better. I've got Kyle Ayers here from Cross Country Mortgage again with a little market update, and we're going to talk a little bit about first-time home buyer programs and why they're beneficial and why now is a time to possibly buy. So thanks for coming back again, Kyle. Good to see you.
Thank you, Scott, for having me. Yeah, great time for the weather here. This weekend was amazing. Got to go down to the shore. Got to see it's starting to open up a little bit. People on the beach, which was nice. So definitely the weather is getting nicer. I think people are starting to get out of their house, which is nice.
Yeah, we were down this weekend too, and we didn't even go near the beach, and the amount of traffic and people was crazy.
Yeah, definitely. You can see people starting to come out of their houses again for sure.
But yeah, we drove back Saturday at 5:30, and it felt like I was driving home on a Sunday night in the middle of summer at 8:30 at night. That's how much traffic there was. So
yep.
Definitely itching to get out. There were we went to a fishing spot out in the bay in North Cape May Villas area, and there had to be 60 boats out there fishing, and I've never seen that in that area. So,
well, it's one of the only things you're allowed to do now, right? So you're allowed to go fishing. You're allowed to do a couple of those things. You can tell what's going to be crowded this summer for sure because of the limited activities that we're allowed to do. So,
yeah, absolutely. So, but glad to have you back.
Thanks for having me.
Yeah, if you don't mind, just fill us in a little bit about. I know not too much has changed as far as rates and the programs right now. I think we're kind of in a standstill till they figure out what's going to go on with the market as far as mortgages and everything with the coronavirus. But fill us in a little bit on where mortgages are right now.
Exactly right. I mean, rates have been pretty stagnant since they got things figured out, I guess I'll say, at the beginning of the coronavirus really outbreak, since the stay-at-home order. That's where things got really crazy that first week. But pretty much since then, we've been on a pretty stagnant level. And I can even show you just a quick chart just to kind of show how that works a little bit. And so this is what we watch. If you can see that, Scott, if you can pull that up.
Yeah, I can. Let's see. Sorry, I'm looking at. I got a couple screens here. So
okay, and that's going a little crazy, is it? But pretty much since then, we've been on a pretty stagnant level. And I can even show you just a quick chart just to kind of show how that works a little bit.
Okay.
And so I'm looking like I'm getting a little bit of an echo there, but as you can see here, this crazy part with the large lines, these are showing mortgage-backed securities, and you can see the dramatic changes that happened at that big section at the beginning of the coronavirus outbreak. And it really since then you've seen where rates have kind of leveled off and stayed across really in the same range, and that's in that kind of mid 3% range. And so ever since then, we've really kind of leveled off, like I said, and that's across the board for pretty much all rates, conventional, FHA, government rate. Everyone's really floating around in that kind of 3.25 to 3.75 range, depending on the day, depending on your credit score, down payment. It's not changing too much, which is nice. Allowing everyone to get a chance to refinance and keep their pre-approvals at a reasonable level. I mean, rates being this low, in terms of history, is just amazing for buyers right now, and anyone refinancing as well. The time to save a little bit of money when money can be tight, especially, and help anyone that's getting pre-approved increase their purchasing power a little bit. With lower rate, that allows you to buy a little bit more house. About every $10,000 of mortgage amount is only about $40 to $50 a month in payment. And so that's the same as about 0.25% in rate. And so if rates are a whole percent higher, that's, $200 higher a month. And so that all of a sudden is an extra $50,000 of what you can buy in a house. And that's very loose math, obviously. But we can help you determine that. Anyone out there is looking to get pre-approved, we can help you determine how that budget and how these rates affect what you're looking to buy.
One of the things I keep getting from people that, my clients that have bought in the past year or two, or, maybe even 3 years, they're wondering if it's a good time to refi. And obviously, it depends on your rate. And 3 years ago, you're probably right around the 4% mark, 4.25%. But one thing I've been talking to them about is going down to a 20-year or 15-year, pretty much keeping the same mortgage payment, or fairly close, maybe a couple bucks more, maybe a couple bucks less. But if they're going to keep their house, keep their mortgage, they're looking at saving, $70,000, $50,000, $60,000, $70,000 over the lifetime of the loan and increasing their equity a lot quicker. So what are the rates on like a 15 and 20 year right now? Are they fairly low?
They're extremely low. We're seeing rates for 15 years in kind of the high twos, so 2.75 to maybe 3.125. So definitely low on a 15 year. 20 years, surprisingly, are not much lower than 30 year. So typically, if someone's kind of doesn't want to increase their payment, what we usually recommend is sticking with that 30 year, because there's no penalty to pay it off at a faster pace. So you can always pay it off on a 20-year term. But because the 20-year product is just something that not many people are buying, it's not used a ton, it's a little bit less competitive. And so the rates for a 20-year or a 30-year end up being about the exact same. And so you can always make that, faster payment. But you're able to save a little bit more during times like this, maybe when money's a little bit tight, things like that. But if you're comfortable coming up a couple bucks, you can save a lot of money on the lifetime of interest if you're going to a 15-year. Absolutely.
Yeah, and going on to, you were talking about paying your payments down. What I think a lot of people understand is how interest works on a mortgage, that you're really paying for your arrears. So when you pay your payment in January, you're paying for December's interest. But one of the things people can do is a biweekly payment, because it's going to reset their interest for 14 days or 15 days, whatever the days are. So you're not paying interest on top of interest for the whole month. You're resetting it. And I believe you end up getting like 3 or 4 extra payments a year out of it. I don't know the exact number, but I know it definitely drops your principal and your term a lot.
It does. Yeah, it definitely shaves off a couple years off the end of your term. What it actually does is it makes 26 half payments a year, which ends up being 13 monthly payments. So you get 1 extra month a payment, which you can also actually throw a little bit extra towards your payment every month, just to split up that month as well. And it ends up working about the same. But you're right, you are paying for arrears, the previous month interest. So you're paying off that off a little bit quicker when you're doing the bi-weekly. Definitely helps.
Yeah, I mean, I just refied into a 20-year back in, I think it was November, and now it's got me wondering with where the 15-year rates are, if it's worth refining into a 15-year and cutting another 5 years off the mortgage, where I already cut 7 years off of it. If I could cut another 5, I mean, that would be awesome. Yep. It puts people in a better position, more equity in your home.
Absolutely.
If you have an emergency and you take money out against the home, you have it there. If you want to do a house project, you can get a home equity line and do the house projects, which is nice with those programs.
Yeah, and we're seeing a ton of people right now getting those home equity line of credits as well. Rates for them are extremely low because that's followed by the prime rate. So as that prime rate fell so dramatically, over these past couple of months as well, that's become a big piece for folks as well. Having that extra liquidity, like you said, just available, and especially with those interest rates being extremely low as well, it just makes a ton of sense to go ahead and do that.
Yeah. Well, you touched base a little bit about how with the interest rates being so low that you can buy a little bit more house. So fill us in a little bit on first-time home buyer programs, maybe why right now would be a good time to buy. I know, from my aspect, the buyers are taking a little bit of a hit right now because, we have I think the number is 30% less inventory than last year with the same amount of buyers. But then again, so buyers are paying a little bit more for homes. But then again, with such low interest rates, it's tough not to go and find something as a first-time home buyer and look for a property.
Absolutely. And what I'll say is, it doesn't cost anything to get pre-approved and to figure it out, to set a plan. So even if you're saying, hey, you know what, I'm not quite ready to buy yet, but I want to fix my credit or I want to save a little bit more money, come talk to us, and we'll tell you exactly what you need for your credit. We offer free credit counseling. We do, basically free budget planning as well, and just to try and figure out how much money do you need to save. You might be surprised, and you might have more than enough to buy a house today. and at least to start looking and start getting an idea of what those houses cost and starting to see, what areas you like and narrowing down that search. I'm sure you can touch a little bit on that, on how first-time buyers can have an extremely large search radius when they start out. And it's all about really narrowing that down into finding the neighborhood or the type of home that they really like and that they want to buy. But certainly right now, first-time home buyers have definitely have a lot of options. When it comes to regular conventional loans, there's first-time home buyer assistance programs, things that help bring your monthly payments down even further to, again, give you a little bit more buying power and to make those new, maybe a little bit larger mortgage payment than you're paying in rent a little bit more comfortable. So things like reduced mortgage insurance and reduced down payments can be a big help. And those are all available first-time home buyers. A lot of them are income-based. So the folks that need the help are going to get the help. And then if you're maybe a little bit outside that income range, we do have a lot of flexible programs that are available to everybody. FHA programs, if your credit is maybe not quite perfect or you're trying to keep as little money out of pocket as possible, get a large seller credit, things like that are going to help big time for everybody, and maybe not just first-time home buyers. Maybe somebody that's looking to upgrade their home and doesn't have as much equity as they want. We've got tons of options for them as well.
I know pre-COVID, New Jersey had the first-time home buyer grant program where you could get up to $10,000 towards your down payment and closing costs as an assistance from the state of New Jersey. But I believe they suspended that, and I'm not quite sure if it's back to active yet. I would assume it's not with everything going on yet. So hopefully they bring that back, because we've had some clients that have used it. A little bit more expensive. There's some fees, a little higher rate, but if you need that $10,000 and you're going to be in the home for minimum 5 years or more, to me, it's well worth it for that program.
Absolutely. Yeah, it's definitely a great program. There's ones for Pennsylvania and New Jersey. The New Jersey one's actually a little bit better than Pennsylvania because it goes up to $10,000. In Pennsylvania, it only goes up to $6,000 for that down payment assistance. But actually, all of those have been on hold. And that's just because those are one of the riskiest programs because buyers have the least basically skin in the game. So they've got, down payment assistance, they've got help getting a pre-approval, they've got a lot of help on some of those. So they're a little bit riskier buyers. So banks have been unwilling to lend those types of products. So it is on hold, but we definitely think it'll come back once everyone's back at work and things are a little bit less risky out there in the economy as well. People are right now still worried about whether or not everyone's going to get back to work, which is a big concern. And so people that kind of forecast those models into that risk have determined that that's where some of the scary points are going to be, is just making sure everyone gets back to work in the timely fashion and doesn't, run into any extra challenges that could arise from maybe not getting the job back.
Can you fill us in, because we're talking about assistance for people with buying and some state programs, but on my end, one of the frustrating things with me when I meet with new clients that have never purchased before, new to the business, they're like, oh, well, my lender said that the seller will pay my closing concessions. What is that? And me having a mortgage background, my immediate reaction is, no, that's, yes, they're giving it to you, but it gets built into your loan. Can you explain that a little bit for first-time home buyers?
Absolutely. Seller concessions when available. And ultimately, it really depends, on whether or not you're in really typically a competing offer situation, I think is where that availability will come to play in most cases. And so what happens is essentially, let's just say, for example, you're going to buy a house for $100,000 and the seller agrees. The sellers, you could also say, I'm going to give you actually $105,000 and the seller's going to give me $5,000 back at the table to help cover some of my closing costs.
Yeah.
Now that may come into play if you're the only one writing an offer, but if you're writing an offer with 3 other people and someone's writing a full price offer and doesn't need that extra $5,000 back in seller credit, then certainly you're going to have trouble getting that. But $5,000 in mortgage amount, which is essentially what you're doing when you're adding that seller credit, like you said, you're essentially increasing your mortgage or the sale price of the home to give you a little bit more cash back at closing to help reduce your out-of-pocket costs. And basically, like you've seen, only $10,000 is, like I said, about $40 to $50 a month. So if you're able to get $5,000 to $10,000 cash out of at that table in seller credit, then raising your mortgage $25 to $50 typically is a little bit less painful.
Yeah, and just I guess the toughest thing for me is people don't realize that their mortgage is going to be based off of the 105,000 and not off of 100,000. So the toughest thing is they don't understand is that it's really their money at the end of the day, because they're paying for it, even though the quote unquote seller is assisting. They're assisting, but at the end of the day, it's your own money because you're paying for it over the lifetime of the loan, which is frustrating to me because a lot of lenders, I think you do a really good job of explaining that, but a lot of lenders out there just get this notion in buyers' heads like, oh, the seller's going to pay for it. I don't ever have to pay it back, and that's not really the case.
Yeah, it's really I typically try and use it as a worst case scenario. If you've got funds from other places, like if you're able to borrow from a 401k or a retirement program, or if you're able to get a gift from family, or if you have got a little bit extra savings, or you were able to get some of these down payment assistance programs for first-time home buyers like we're talking about. There's tons of options out there, and definitely making sure that your lender goes through all of those options and discusses them with you is really important, and doesn't just steer you right down to the seller credit, the easy route for lenders, I'll say. It does make our job a little easier sometimes, but yeah, you got to know about all of your options. It's important to learn about everything. So.
Nice. Well, that's been some great information, I think, for first-time home buyers that are maybe on the ledge of, do I go buy? Do I not buy? What's available? What's not available? So if anybody's thinking about buying, you can reach out to myself, obviously, for the real estate search. But Kyle is a great source of information, offers different programs for first-time home buyers that allows you to get in for minimal money down with the right credit scores and the right criteria. So if you guys have any questions, if you know anybody looking to buy, please reach out to Kyle. His cell phone number is 215-407-1245. And obviously you can always reach out to me at 856-264-8671. We're always around to help. And again, Kyle, you have anything else that
just a big reminder that there's no cost, there's no harm, there's no risk. It's really 100% to help you guys understand how the process works, how do mortgages work. We do kind of what we call a buyer 101, where we literally explain all the different types of mortgages, what's available to you, how the different payments will affect you, how the different down payments will affect you, how much money do you need. And like I said, totally no cost. There's no risk. We do a free credit check. We'll give you your whole credit report. So you're able to learn a lot about your own financial position and where you want to go. And so we're available nights, weekends. Give us a call. Like Scott said, our phone numbers are available. Shoot us a message. We're happy to help anytime.
Yeah, and considering since we can't go anywhere, we're definitely.
Since we can't go anywhere, we're home a lot, and I am by my cell phone. So yeah, give us a call.
That was this weekend. You mentioned the short. I finally had to almost just put my phone away and not answer it because I've been working 6-7 days a week, and even if it's only for a couple hours a day, on those days you can catch a couple hours to yourself. You're still working, so mentally.
Yeah, that's what I did. I had to take a break. I got a little sunshine by the pool. It felt great. So
nice. Well, again, if anybody has any questions, interested in buying, please reach out to us. We're always here for any questions, and we'll be back again on Tuesday in 2 weeks to discuss another mortgage topic and see what's going on with the market. So
on that note, if anyone out there has anything they want us to talk about, you have any ideas and hints, shoot us a message, drop us a line.
Sounds great. I appreciate it, Kyle.
Thanks, Scott, as always.
Talk to everybody soon. Thank you.
Bye.
Bye.